for having us this afternoon. I'm not going to spend a lot of time talking about what Troilus was in the past. I'm really going to talk about what we've been doing because we've been adding a lot of value and a lot of bounces quickly. And just need to make sure that, I spoke too soon because the slides don't want to, oh, there we go. Easier than I thought. Okay, so what was Troilus? Troilus was discovered in '87. It was drilled for 3 years. 5 million ounces were defined. It was defined by Inmet. It was thrown to the construction and production team, and it was exploited for 14 years. 2 million ounces of gold was produced and 70,000 tons of copper. That is the extent of the work that was historically done on Troilus. As soon as the resource was found and delineated, all drilling stopped, all exploration stopped, all understanding of emplacement of the deposit stopped. There was some faint regional work, but nothing really. Of course, when the mine shut down, as it was shutting down, there was a failed merger with Lundin Mining, and then in came First Quantum. And First Quantum's focus, of course, was on Cobre Panama. And the market was bad at the time, and Troilus was put into reclamation without very little work being done. Jump forward, we acquired it privately about 4 years ago. We've been a public company for 2 years. We had a 3-year option JV just to make sure we had some economic and geologic model to put around the deposit. 80,000 meters later, we're now a 6.4 million ounce resource. We've defined a belt, not a deposit, and a new geologic approach to the model and to the belt is showing a lot of rewards for us. This is a summary, a visualization of what is there. Production historically was from 2 pits. Z87 is in the foreground, down to about 320 meters deep. And in the back is the J4 pit, which was about 120 meters deep. There's 30 million cubic meters of water in there, if you're asking. We've completed our EIA for dewatering. We've had our community consultations, our First Nations consultations. We bought a water treatment plant from Eleanor. It's sitting between the 2 pits right now. We've run 2.5 kilometers of power there as well. We've just received our questions back for a permit application, and if all goes well, we'll be starting to dewater well ahead of any feasibility study, but we're going to start to dewater this summer simply because it's a critical path item for an expedited production scenario. We have about 90 million shares out. The cash we actually raised in February, it was timely. So we're sitting with about 14.5 million in cash in the bank. And as of right now, our market cap is actually about 90 million. When we presented with Gwen in January, we were 30. So things are moving in the right direction. We're well covered by the street. Just a quick comment on COVID preparedness. Our balance sheet's strong. We're going to deliver our project this year and what I'm about to present to you, and still have about $5 million left in the bank at the end of the year. We were lucky enough to have drilled in December, January, and February our phase 1 for the year. As such, those results are coming to the market now, and we'll end up drilling about another 15,000 to 20,000 meters this year as we get back to work. But certainly, despite the slowdown in Quebec now, it's not slowing our progress at all, because this is going to be a quiet time for us during breakup anyway. Insiders own 10%. We bought every share in the market since the RTO. We buy on every deal. We're in the market constantly when we're not restricted. We have about 15% retail shareholding. That's increasing, and the rest we are institutionally held. With the Case, Sprott, and Maple Leaf Funds being our largest shareholders. We're very proud of our Quebec institutional ownership. SideX, FTQ, James Bay Investment Board, and the Case have really set the framework to assist us as we move forward and have been there on every financing. I'm not going to spend a lot of time on Quebec. David did a great job on the jurisdiction. I think really, and I'm not going to talk about the gold deficit because Gwen hit on that on the way in. So let's talk about where we are. David talked about the Abitibi, probably one of the most prolific gold belts in the history of gold production. And we're in the Frotét Evans belt, about 200 kilometers to the north. Same rocks, same age, slightly higher metamorphic grade. And the main difference being for every 10,000 meters of drilling in the Abitibi, we've probably had one. The big difference being that we're buried under 10 meters of till. Troilus was discovered by a large 15-meter boulder sticking out of the till, running about 10 grams, and then traced back to the deposit. Chibougamau is our hub. Our office is an old dentist office, so we have very comfortable chairs. We can drive you to site in about an hour and a half up Rue Nord and then through our haul road. This week we announced some land acquisition. We had 16,000 hectares in the white that you can see on the left. We consolidated the southwest extension of the Troilus trend through an acquisition of about 620 claims from 03. This week we paid 1.7 million shares, plus we staked another 620 some odd claims ourselves. So we now have over 840 square kilometers of the land. Seems like a lot. There's a lot to do. We have over 250 mineralized outcrops and occurrences that haven't been traced. There's historic resources on there. We're going to get to this ground, but we want to apply our new geologic model to the belt, and we think we're going to see quite a bit of success. With this, though, we inherited $3 million in exploration expenditures. And with the deferral in filing those as well, we have about 4 years to look at it. This is our main property and our main focus. The majority of the production and mineralization has been in the J zone and Z87, and that's our active mining lease. Point of differentiation for us is the infrastructure. We have a 45-kilometer haul road that's production ready. We spent about $500,000 on it coming off of Rue Nord. That cost $1.5 million a kilometer to build. Hydro-Quebec upgraded all 85 kilometers of our power line this fall and winter. That's $750,000 a kilometer to build. So there's our market cap. Everything else I'll talk to you is free. We have a 50 megawatt substation. We spent about $350,000 with ABB on that last year and this winter. That's capable of running a 40,000 ton a day mill and power a 500-man camp. We get power for 3.2 cents a kilowatt hour, and if we increase through our tariff, it'll go to 2.8. We have a 60-man camp there. All the earthworks are done. Underneath these pictures is our tailings facility, fully permitted. If we had tailings to put on it, we could. At 20,000 tons a day, we have 6 years of capacity without a lift. Where I'm going with this is there's probably $400 million of priced and verified CapEx on this page. But from my perspective, with the time cost of money and capital, especially if you're a large shareholder, is 3 years. Geologically, Troilus was originally hosted or thought to be hosted in what was called the Troilus diorite. And when you find these brecciated zones within it along the margin, that's where the deposit is. What we have found through quite a bit of work that we've done is that, yes, it's a great host, but the mineralization actually structurally transcends out of the diorites and into volcanic units, and in fact, any units or any structural accommodation space that's available. We have now traced mineralization, not just at Z87 and the J zones, but we've actually traced it from Lac Allongé, where we have 100 grams per ton in outcrop, down to the southwest zone, which I'll talk to you soon, which is some of our drilling. That's our mineral growth. This was and is a low-grade bulk tonnage deposit of around a gram. It was always mined around a gram. There are high-grade jewel boxes within. But just for interest's sake, this mine was put into production in a $250 gold environment and made money. It was expanded in a $500 gold environment, and very little capital was ever put into the operation. 2016, this is what we inherited. We inherited 200,000 ounces below the J5 pit, and we inherited about 2 million ounces underneath the Z87 pit. 1.6 grams underground to 550 meters, low-grade bulk tonnage. Market didn't like it. Very analogous to Goldex. Where are we now? The J4 and J5 zones, a very robust open pit down to 550 meters and continues. We've extended Z87 600 meters off the pit, and the underground continues through 850 meters. That's the distribution of our drilling. There's lots of holes. We've only been there for 2 years. And obviously capital and advancing is an issue. So as we drill, we have over a 98% hit rate on our drilling. This is a 0.3 cutoff, so everything you see here is essentially a gram. The Whittle shells run down to about 500 meters, and I'll just really focus on the saddle zone is going to be a focus of exploration for us, northeast of J5 and then off of southwest. Of significance for us, besides just adding a lot of ounces and certainly economic ounces in this gold environment, we pushed the Z87 deposit 600 meters off the edge of the pit. It was not a function that Inmet did bad work. Inmet did great work. The fact is they didn't do any work. They didn't have the opportunity or the budget to do this. So there was a lot of low-hanging fruit that we're converting now. And here's an example. There's the old J4 pit. We showed up, we were told there was nothing below it. Well, 100 meters below that pit, we hit 64 meters of 1.3 grams. I'll just notice the pinch and swell nature of the mineralization. That's quite important. We're seeing a thickening and also an increase in grade as you get to depth, which isn't too unlike things you see in the Abitibi. The underground, we actually really like the underground. At a 0.9 cutoff, you have 2 million ounces at 1.8 grams. If you were to go to at a 0.9 cutoff, if you go to 1.2, it's a 2.5 gram ore body that's 25 meters wide and runs for 1.2 kilometer strike length. In Australia, that's a spectacular deposit. There is, what I always say to our shareholders is that there's 350 meters of pre-strip done, and there's actually a $7 million, 450 meter ramp put into that underground already. It's wet, needs to be rehabilitated, obviously, but a lot of the hard development dollars are already done. It's a store of grade that if you assume a 20,000 ton a day operation at a gram from open pits, you could supplement 5,000 tons a day from the underground at a 2 gram or a 2 gram head grade, and then run a 1.3, 1.5 gram through the mill. And at 20,000 tons a day, you'd be a 220 to 240,000 ounce producer. But this is the exciting stuff that we've been putting out to market. It's the southwest zone, 3.5 kilometers from Z87 on the road on your way in within the mining lease. There's a showing there, I think actually Gwen saw it when she came to site, called the Sandpit showing. We water cannoned it, we expanded it by about 300 meters by 300 meters, and what we saw is that this was same rocks, same structural control, same alteration mineralization as Z87. Originally, the two deposits were thought to just be faulted apart, and what they actually are, they're tightly folded on top of each other, and the J zone and Z87 actually represent two separate sides of a syncline. We're not sure if this is where the fold hinges in the southwest, but certainly we're seeing two very distinct limbs going. So our discovery hole in December, which we released in January, was 17 meters at 2.8 with 24 of 2.2. And then over the last couple of weeks, we've been putting out some results with, the headline being 73 of 1.6 and 48 of 2. All very shallow, and I think that's probably the main point. All of these zones that we're drilling, we can now source to surface and to outcrop. And here's one of the sections from the southwest zone that we've had that includes the 73 of 1.6. Notice the 200-meter depth line here. Of significance, we are seeing a far greater intensity of alteration. This looks a lot like Z87 South coming off of the pit. Complete obliteration of the original fabric. We believe the Troilus was more of a felsic volcanic unit that we're seeing, but there's not a lot left to tell, which I certainly like. Couple more sections. Again, that's only 100 meters deep, 33 meters of 1.6, same type of textures, and same thing here. So realistically, our interpretation is that these two limbs of the syncline extend from the main mine down, and we're not being cute here saying that it wraps around the tailings pond. It's actually, the tailings is on top of a granitic plug called the Junior Parker. But of significance, we've opened up 3.5 kilometers of strike length in between the southwest and the main deposit, as well along to the north. Gives us lots of optionality going forward. And then, like David talked about, Troilus has a high-grade component that is often overlooked. Every ton that reported to the mill usually reported about 10% higher grade. We're running a large-scale, almost $1 million project with Western and Laval. And here's some high-grade drilling that we've completed over the last 20 months. 20 meters of 4 with 2 meters of 37, 2 meters of 40, 7 meters of 20. These are all within our pit shells. And what we find, and you can see in the picture on the right, that's Neil Banerjee from Western. That quartz vein is probably running about 30 grams, and notice the pinch and swell nature. But what we see is that there is a later remobilized gold. It's associated with vuggy pyrite, and it's perpendicular to the main trend. It fills in areas of accommodation space and structural openings, and it's not only identifiable now, it's predictable, and we can replicate it section after section. And that's important as we go into the modeling for mine plans and continued resources, because certainly when we're trying to get an economic return, we can focus on some of the higher grades. What are you going to see from us going forward? You're going to see a few more weeks of drilling from the southwest. You're going to see metallurgical results coming out. We have 15 years of data, but certainly technologies have improved things over the last 20 years. You're going to see a new resource on the southwest. And so that's 6.4 million across both categories that we have. I think it's going to grow fairly significantly. And then you're going to see continued exploration for us. We'll have a PEA out to the market this summer. We were originally going to go right to a pre-feasibility, but a whole bunch of things happen when you do that. You start your project description, your IBA discussions, et cetera, What we want to do, especially with the inclusion of the southwest now, is keep that flexibility. We're finding a lot more ounces, so let's not start putting nails in the coffin as far as exactly what we're going to build, because we don't know yet. We've got a very experienced team led by Blake and Bertrand, who have found over 5 million ounces. Our board has improved materially. We brought Andrew Cheadle in. Andrew ran Musselwhite for 10 years. Dr. John Hadajerio, he's the chair of Lassonde School of Mines. More importantly, his consulting company does all the external audits for LaRonde, for Malartic, and for Vale. And then Eric Lamontagne built and engineered Meadowbank and Melodine for Agnico. He's running the Greenstone JV for Premier and Centerra right now. But he was the last superintendent at Troilus and gives us that history. In fact, we think he got fired at the end of the mine life because he put that ramp in underground without permission, because he thought there was another 20 years left. We're cheap. Everybody's cheap. I think that there's a recognition, and I'm just going to target a lot of the comments that Gwen opened with, I think apply to us, so I'm going to leave it at that. There's lots of room upwards, and that's all I've got.